Good afternoon. It's Chris Robinson, Robinson Ag Marketing, with today's post-close grain and livestock comments for the 15th day of June, Monday. Well, not quite a key reversal, but boy, what a doggone good turnaround. These corn hit 434 and a quarter last night, a new contract low, and then turned around and finished at 441 and three quarters. If we had settled above 444, it would have been a key reversal. As it is, I guess you want to call it a bullish hook. I don't know. But we got to get through 444, which was Friday's high. If we can settle above that, then you may see some of the same money that just jumped out of this thing on the way down get long again. July corn went down to 406 and a quarter. Why is that important? Why does that number matter? Well, 405 and a quarter on the continuation chart, the long-term continuation chart, there was an old gap there that guys were looking at. So we got to within a penny, turned around, and then rallied a dime. So a good short covering rally. Is it just a short covering rally in a bear market, or is this, a sign that we're overdone and due for a shift in trend? We won't know until Friday. I think until this deal with Iran is completely sewed up on Friday, you're going to continue to see swings here. And you see it in crude oil. Crude oil did trade below $80, but it's back above 81 right now. In the outside markets, you see silver hit 71.40. It's already back under 70 again right now. So I think there's money flow out there that's chasing the continued concern about what's going on in the Strait of Hormuz. But again, if you're a farmer producer, you couldn't ask for a better turnaround Monday. November beans hit 11.21 and three quarters and went right back to where? Well, 11.34 and three quarters, right back to our old friend, the halfway back level of the entire year's rally. That's a really good sign, because if we had settled below 11.20, it opened up the door to 11.11 and then even an $11 print. You got to remember, at the beginning of the year, we were at 10.50. So nobody wants to go back down there. So 11.34, good way to finish the day. July wheat hit 71 overnight. Didn't get quite back to the April 10th USDA low, but then also turned around and rallied 20 cents. Kansas City hit 621 and a half, turned around and rallied 20 cents, finished at 640 and change. So again, it started out looking like an ugly day. A good recovery. Now, this corn, wheat, and beans are still trending lower, especially corn and wheat. Soybeans are hanging in there, but the journey of 1,000 miles begins with one step. Hopefully, between now and the 30th, you get some stabilization. The 30th, we're going to get the USDA acres report, and it doesn't always make a difference, but it can make a huge difference. Historically, it has. The one that made the most difference in recent memory was 2012. 2012, we made our lows on that report and then never looked back. And that was also the year we had, a weather issue. So you had kind of a perfect storm. Are we going to get another situation like that? I do not know. But the every day we get closer to that report, it becomes more and more important, because everybody wants to see, did we lose corn acres or not? Did we lose corn acres to bean acres earlier this year? If we've lost more than 1 million acres of corn, then I think you could get some really interesting price action. I'll just leave it at that. In the livestock market, cattle eked higher today, up $2, and August fats finished at 243.250. August feeders finished up $4, up actually 4.125 at 360.550. A good recovery, a new high for the move for the cattle since we had that debacle low on the 4th when we hit 336 in the morning, and then by the end of the day we were sharply higher. That was the day they announced, yes, that we do have NSW up here in Texas and a couple animals. So good recovery there as well. Are we going to go push through 370 and then go take a shot at 380, the old contract high, 379.45. It's possible. It's a good second choice. Again, if back on the January 4th you were mad because we were sub 340, this is a mulligan, this is a gift, whatever you want to call it. We're only $20 away now from re-challenging the contract high. And so far, we've seen a lot of money flow issues here. So far, the funds have stayed long the cattle. They flipped and got short the hogs, and I'm going to finish up with that real quick. Hogs, once again, under pressure. We had a couple fits and starts. It looked like we maybe, had put our lows in. I'm looking at August hogs right now. If 94 fails, then we've got a problem. We did finish the day at 94.77, but moving ahead, I think as long as 94 holds, that's going to be the battle line for the hogs. So I'm going to wrap it up on that note. This is Chris Robinson, Robinson Ag Marketing. If you did not get my webinar, I spent about 15 minutes going through all these charts and talking about the areas that are important and why they may be important. If that's something you're interested in, call me. I can send you the link. If you're not getting my letter, I do a Monday through Friday letter after the close, and then I also do a weekly wrap. If you want to take a look at that weekly wrap, give me a call as well, 312-638-8868, or drop me an email. You can always sign up online as well, robinsonagmarketing.com. If there's anything I can help you with, don't hesitate to call me. Take care.